For the US market, Dow Jones Index advanced about 1%, and the S&P 500 and Nasdaq Composite advanced 1% and 2%, slapping a 3-day losing streak after an initial batch of quarterly results from companies including Delta, Fastenal, and BlackRock, which came in better than expected. Meanwhile, JP Morgan shares lost more than 3% on Wednesday after the company posted larger than expected loan losses. Tonight, Wells Fargo, Goldman Sachs, Morgan Stanley, and Citigroup will post their first quarter earnings. In economic data, retail sales, import price, and jobless claims are also set to come out tonight. On the other hand, US dollar index retreated slightly to 99.8 from about 100. Brent crude future was down 0.6% to $108.1 per barrel. For the Hong Kong market, Chinese stock performed well in the US ADR market. Tech stock and EV stock also performed notably, as the State Council said it would support new energy vehicle consumption and restrict provincial government to limit car purchase. Shell share price rose over 7%, and Leo and Li Auto were up 4.9% and 4.4% in the US ADR market. China Premier Li Keqiang urged to deploy monetary policy such as triple R cuts to boost the economy and encourage large banks to gradually scale down reserve ratio. We see the expansionary monetary policy to boost market liquidity, driving up Asia's market and also Hong Kong market today. Hang Seng Index support is estimated at 21,000. Fund flows increased to 2.9 billion through the Stock Connect yesterday, with the most led buy on Tencent, CNOOC, and Jijin, and most led sell on ICBC and CCB. After the resumption of game license approval release, market expect normalization policy on online game sectors. However, on anticipated interest rate hike and stretched US-China relationship, limited funds are expected to flow into tech sectors, and internet platform stocks such as Tencent will remain range-bound. On the other hand, according to Reuters, CNOOC is preparing to exit its operations in Britain, Canada, and the United States because of concern that the asset could become subject to Western sanctions. Although the production and revenue from US and Europe is not high, near-term share upside is limited on increased volatility of oil price and relatively large accumulated share gain. For the stock pick today, we'll recommend Longyuan 916. Longyuan is the largest renewable energy company in China, with 90% of its business engaged in wind power business. Thanks to rapid power generation growth, Longyuan net profit growth 30% year-on-year in 2021. After the slow start for the first 2 months of 2022, Longyuan Power sales rose 21% year-on-year in March. Moreover, the Ministry of Finance might repay part of the outstanding subsidy receivable for renewable power companies, which would be another short-term catalyst. We suggest to buy with a target price at $18.4 and a cut-loss price at $15.1.